One of the major value propositions that Bitcoin offers to investors is that it has a predictable monetary policy and development schedule. But if you're watching Bitcoin's price action on a day-to-day basis, predictable is probably the last word that would come to mind. Price can be extremely volatile, leaving many of us always guessing which way it will go. However, there are a few models that have been able to predict Bitcoin's price over longer time frames with shocking level of success. I'm going to show you what they are today and tell you why they're important. Let's get it. Welcome to BitBoy Crypto, home of the Bit Squad, the largest and greatest crypto community in all the interwebs. My name is Ben. Every day on this channel, I show you how to make money in crypto. If you like money in crypto, then make sure to hit that subscribe button. In this video, I'm going to give an overview of the Bitcoin halving cycle and stock to flow model, which has done an incredible job at tracking the price of Bitcoin. Stock to flow was first introduced in a 2019 blog post from an anonymous Bitcoin researcher who calls himself Plan B. This model uses Bitcoin's scarcity and scheduled issuance to give a rough estimate of where the price will be in the future. It's pretty complex and involves some math, but on a surface level, it's not too difficult to understand. The stock to flow ratio is determined by figuring out the total amount of Bitcoin currently in the market and dividing that by the amount that is scheduled to be produced. With Bitcoin, the production of the asset is extremely predictable, which makes this model very accurate. However, it has also been used for commodities like gold and silver, but they are more likely to see deviations because their rate of supply is not as predictable. Bitcoin's stock to flow ratio is also compounded by a halving, a mechanism that is triggered every 4 years on the network, cutting the production of Bitcoin in half. Technically, this happens every time that 210,000 blocks are mined, which works out to roughly 4 years. The first Bitcoin halving took place in 2012, when the reward for mining a block on the Bitcoin network went from 50 BTC to 25 BTC. 2016, a second halving event cut the rewards down to 12.5 Bitcoin per block. And then on May 11, 2020, just before our massive bull run kicked off, the reward or flow was reduced down to 6.25 BTC per block. The next halving is expected to happen sometime in early 2024, further reducing the production flow. Numbers aside, the important thing to remember here is that the Bitcoin bull cycles have traditionally been driven by the halving, which reduces the flow of new Bitcoin into circulation, which in turn makes the remaining supply or stock more valuable, assuming that a steady rate of demand continues. In August of last year, Fidelity Digital Assets published an assessment of Plan B's model and recognized that commodities with high stock to flow ratios have historically served as superior stores of value. The report also noted the Bitcoin stock to flow ratio will surpass that of gold after the next halving. I thought it was a good sign that Fidelity was very bullish on Bitcoin long term, and even quoted Brian Kelly of BKCM when he said, "Bitcoin is the most significant innovation in finance since the Medicis invented double entry accounting. And when it comes to money, always trust the paisanos." Halving cycles and available stock of Bitcoin might inform the S2F model, but there is an older model that is based on some seriously old school numbers, the Bitcoin Golden Bull ratio. Bitcoin is strong like bull. That's obvious. No other store of value asset in history has appreciated in value like Bitcoin has in such a short period of time. The golden portion of the Golden Bull ratio gets its name from the golden ratio, which is 1.681. The ratio was used so much the Greeks gave it the symbol phi to simplify their equations. Hundreds of years later, mathematical Italian Leonardo Fibonacci started using it to make some numbers that he named after himself. These numbers came to be known as the Fibonacci sequence, and they become so important to science and finance that day traders will trade using Fibonacci retracement sequences, or fibs for short. So you take two mathematical concepts and apply them to an algorithm-based monetary system like Bitcoin, you start to see some pretty astounding results. If you line up the variant of the 350-day EMA as ribbons on a graph, you'll notice that Bitcoin has been tracking between them its entire life. The Golden Bull ratio has it on its page on TradingView. Majority of the price predictions to come out of stock to flow, including my own, have been based on analysis of the stock to flow model. Plan B's price target for the end of the year was a range between 100K and 288K. And with the price action that we've seen throughout this history of Bitcoin, this is still a possibility. At this point, 288K is probably out of reach for this year. But we've seen the price of Bitcoin double or even triple across very short time frames before. Earlier this year, we watched the price jump from the low 30,000s to the high 50,000s in just 1 month. Back in February, around the time that Bitcoin had nearly doubled in price from the previous month, Plan B conducted a survey on Twitter, asking his followers if they believe Bitcoin would end up closer to 288K or 100K, and a large majority of his followers chose $100,000. For a minute there, it looked like Bitcoin was really going to exceed expectations until the bull run was put on hold by a series of suspicious events that spread fear throughout the markets and pushed prices down to levels we thought we'd never see again. Just like other commodities, the price of Bitcoin can be also influenced by outside forces like tweets, regulation, or larger macro factors. But the stock-to-flow model has still been surprisingly accurate, even in the face of black swan events that disrupted global trade. Sure, Bitcoin has seen huge sell-offs during times of market uncertainty, which caused it to deviate from the stock-to-flow projections. But in most cases, we've seen this asset quickly correct and return to the path that was predicted by Plan B. We are currently in one of those times where the actual price of Bitcoin has strayed pretty far from the stock-to-flow projection. But we've also been seeing unprecedented manipulation in the markets over the past several months. We have seen a massive FUD campaign where governments, media, institutions, and muskrats all seem to agree that Bitcoin is bad for some reason or another. We've also seen whales taking advantage of this uncertainty to shake out retail investors with large sell orders. Meanwhile, these very same whales, the institutions, are negotiating with regulators to offer their own crypto services and products. These whales aren't just accumulating, they're shifting their business models to accommodate this new technology. When institutions are telling you one thing and doing another, that's a good sign there's some manipulation or misdirection taking place. And in this case, it's probably both. It's certainly a problem that whales can use their money and influence to move the price of Bitcoin, but they do this with every asset in every market globally. At least with Bitcoin, they can't manipulate the issuance or the supply. This is why the stock-to-flow model is so resilient in the face of change in volatile markets. I personally feel that it's a solid model that we have to get a good idea of what's happening in the markets from. It's just been too accurate in the past for me to deny, but historical data works until it doesn't. Even Plan B, the model's creator, has been having some doubts himself, and has said the price activity in the upcoming weeks and months will make or break his stock-to-flow thesis. Plan B said the Bitcoin's price has not deviated this far from the projections since January of 2019. You can easily see that the price was far below the projected path on the stock-to-flow chart in the beginning of 2019. That's where the green dots dip far under the target for a significant length of time. However, you can also clearly see that the price immediately rallied and returned to equilibrium with the stock-to-flow model after that sell-off. Could we be seeing a similar situation playing out again, where the price of Bitcoin will shock everyone and race to catch up with the stock-to-flow projections? Truly, it's impossible to know at this point, especially with all the manipulation that we've seen in these markets. But with the fundamentals as strong as they are, I have a hard time believing that we are headed into another crypto winter right now. That's all I got. Be blessed. BitBoy out.